See if we're live. Alright, looks like we're live. Let me hop in and see the chat. Morning Jord, morning Lewis. Big Carl back at it again in those white vans. Damn Jordan. Damn Daniels. Man like Daniels in the white vans. Alright, let me get this link out. Right, but I'll share it with the VIP first. Right, let's mark up for the day, see what we got. Anything pressing? Doesn't look like it. Right, let's mark up the charts. Look like we swept the low of Asian. Bring that all the way over there. So we swept that low. Cool. Broke higher. Change your character. Could be looking to take out these Asian highs. Those are our immediately preceding ranges. In terms of highs, not got much locally. So next up, I guess we'd be looking to really get to these highs. Those there. And those there. That's the pound. Get a little box on that. Euro, similarly. Still got that high. Cool, so gives us a picture of the day. Asian range has been directional, not consolidating, so we're not really giving too much thought to that sweep as much as we usually would. It's also 28 pips, that's a decent range. Check it on the pound. Yeah, like 40 pips. So you can't really say it's a low volume session, it's not consolidating either. We do have a direction. The Asian range trended lower. This was good for our position, our day trading position on the pound yesterday. So as price was moving aggressively up here, we were looking to catch it on our nice fib levels with this double fair value gap, otherwise known as a balanced price range, being mitigated. You can see that that's happened. Prices came in, refilled that fair value, wicked 4 times across 16 hours from that, and then dumped off. What we're looking at now is basically just refilling all the imbalance that's been left behind here. So we've got 1 hour here left still. That might get refilled, that might not. We've currently covered the rest of these imbalances here. This is also somewhat of a balanced price range, but the first one isn't really that much, so we'll just call it a fair value gap. So price might come up and just refill that, and then it's completely stable apart from this order block up here. So that's not something to be ruled out either. So I'm not too worried about our day trade position. If price does come up and test these highs again, to me that would just be like creating efficient order flow essentially. So we're still in this trade. Held it overnight, it sold off nicely throughout the Asian session there. So just got to hold it and see what happens with this one. But it's playing out as we've expected so far. From a day trading perspective, from an intraday perspective, sorry, what we might see then is price might seek these highs. Let me show you that. Seek these previous session highs for liquidity for a move to the downside, which intraday might look like going long if we get the right setups here. So that's what we're looking at today. You can see that price has reversed from the Asian session, created higher highs and high lows. We've gave it that hour of London, so we're an hour into the London session now. If any form of like sweep or liquidity grabs were likely to happen, and hopefully within our trading range now, what we see is a nice series of higher highs, higher lows like this that we can predictably trade using our strategy. So it's if this was a weather report, it would be pretty blue skies. Just gotta wait for a setup really. Not too nice here on a 2 minute on the pound. Seeing some form of indecision there where we've got these highs getting higher but then these lows getting lower. That might have just been, you know, the first 1 hour of London effect. Whereas the euro hasn't done that, so the euro might be a bit more cleaner for us to trade today. Check the chart. Currently in a dirty sell. Asian ranges are big and holding. See if I can get phase 2 nipped in a trade. Nice, George. Wishing you the best of luck. Touch wood. Morning, Rio. Morning, CM. Morning, James. Damn, Daniel. Yeah, that's a new one, isn't it? For George. Wouldn't you like to know, Weather Boy? Fucking hell, bringing all the memes back this morning, aren't we? So, we mentioned in the VIP group, someone asked about, Kyle, I believe it was, new member, asked about how much do we risk per trade. And it's not really a straightforward question like people think. It does depend on a few scenarios, so I thought I'd go over it. How much to risk per trade then? So, the whole idea is to risk 1% of your pot per trade. The reason that is because winning streaks are true, losing streaks are true. Each trade is independent of one another, so whether one trade wins or loses will not affect statistically whether the next trade wins or loses. But losing streaks, winning streaks, clusters of wins and losses, that is, are very true, and they are statistically defined. So if you've got a 50% win rate, the chance of any one trade being a loss is 50%. If you have a 50% win rate again, the chance of you losing 2 trades in a row is 50% of 50%, which is 25%. The chance of you losing 3 trades in a row is 50% of 50% of 50%, which is 12.5%, or 50% cubed, basically. So the way you work out probabilities and the likelihood of things happening in a series of events is you multiply the win rate by one another. So that being said, now I'm not a human calculator, but the chance of you losing 10 trades in a row would be 50% to the power of 10. I don't know what that is off the top of my head, I'll be honest. But the way you have to think about it is still a number. So no matter how close a number is to 0, it is still a number. You think about the chance of Leicester City winning the Premier League. Absolutely tiny, but they still went and fucking did it, okay? The chance of us as sperm cells reaching the egg and then birthing life, that's a very small percentage, but it happened. The chance of lots of things in the universe happening, but they still did, happens. So the chance of you losing 10 trades in a row when you're doing everything right isn't that far off. It's not like as small as you think. So as people, we kind of think, it's a very small number, so it'll never happen. But that's completely wrong, and that mindset will fuck you up in trading. You need to understand that a 0.0001 chance is still a number. So out of X amount of trades in your trading career, it's going to happen at some point. So going back to the point, the reason why it's taught to risk 1% per trade is so that you can trade with a low risk for the long term. Where, in the short term, you might see like max 4% drawdown anytime between now and the next 12 months if you're trading with a decent strategy. But if you want to trade that for a hedge fund or an investment firm and they're giving you lots of capital and you want to trade it for the long run, the longer you trade, the higher the chance that you're going to have those longer losing streaks that you're not used to. So that's why it's taught to risk 1% of your pot, because number one, it doesn't get to you emotionally when you're only risking 1%, and number two, it gives you such a wide breathing space for if you do have those clusters of losses, which we do see. My strategy within the past 12 months, I think the highest drawdown I've seen is like minus 6% on this intraday strategy. Obviously, the more pairs you trade, it will increase the risk. The more strategies you trade and overlap, it will increase the drawdown, stuff like that. But that's generally why it's taught to risk 1% per trade. Now, that's for when you're trading like a large pot of funds for the long run. But if you want to be a bit more aggressive, of course you can risk 2%, 3%, hell 5% risk per trade, as long as you're comfortable with that and you accept the risks of that. Because if you're risking 1% per trade compared to risking 5% per trade, obviously when you lose, you're not losing as much, but then also when you win, you're not winning as much either. So you also need to take that into consideration. We also in the group mentioned a lot of stuff about if this, then this when it comes to risking. And one thing that you can do when trading funded challenges on the phase 1 is I think it's fine to risk 2% per trade, because it is a massive pain when you go through risking 1% per trade and you make that 10% profit and you've not even fucking made any money. It's on a fucking demo account just to prove to someone that you can trade. It feels like a waste. So when you're going through trading challenges, depending on how much that challenge cost means to you, but you should never buy a funded account with an amount that's like too much to you basically. You can risk 2% on funded challenges to speed the process up, because if you blow it, you blow it. It's only a demo account. Just make sure that you're not buying a challenge for a price that you can't lose that amount of money. Do you know what I mean? It is supposed to be something to propel your trading career, not something that you're relying on. And it's going to get it over with twice as quicker and get you to trading on those live funds twice as fast. So you can cycle through them a lot quicker. Now this is a very unique opinion that I don't hear many other traders say, is when you have that live funded account, I don't trade them for the amounts that they market to you as. Okay, so when they tell you that it's a 100k trading account with 1 to 100 leverage, but you can only lose 10% of it, to me, you've only got a 10k account. And it's not got 1 to 100 leverage, it's got 1 to 1,000 leverage. They've just carried over a factor of 10 to trick you into risking 10% per trade. Because if you can only risk 10% of that whole account, that 10% is your 100%. So then look at that 10% of the account, humble yourself a bit and say, I've not got a 200k account, I've got a 20k account, but it did only cost £1,000. So it's not like you're not gaining the benefits of the whole funded system, but if you do chase that pipe dream of paying £1,000 and suddenly having 200 grand, that's where they're going to fuck you up, and that's where you're going to start blowing them too often. Because if you're risking 1% of 10%, you're actually risking 10% per trade, and that is too much. The likelihood of you blowing that just increases tenfold, literally, and that's why they'll do it. So when you get that funded account, let's say you got 200k, treat it like it's a 20k account, but then you can risk, if you want to, 3 to 5% of that. So when it comes to the actual 200k figure, yeah, you're only risking like 0.3, 0.2, 0.5%, whichever number that you want to choose, maybe even still 1% of that. So you'd only be risking 0.1% per trade. But it's going to help you trade funded accounts so much more. It does require you to drop your ego a little bit, because you're thinking, oh, I really wanted to have a 200k account, but now I'm only trading like I've got 20k. But that is how you're going to be stable on funded accounts and trade them properly. They're going to be less inclined to deny you payouts, because you're going to be requesting relatively small ones compared to everyone else. But guess what? You're actually going to realise them profits, because you're going to trade it profitably and not lose the account. So when it comes to how much would you risk per trade, that's kind of everything laid out. Personal accounts, funded accounts. What you can do is you can have 2 separate accounts, trade one on low risk, trade one on high risk as well, so that you've got the best of both worlds with a varying pot size. But yeah, let me know what your thoughts are. Jordan says he risks 2% on challenges. Do you do that on phase 1 and phase 2, Jord? Or just for the phase 1? No, just phase 1. Yeah, that's what I'm thinking. It's not something that I've done too much, but I am doing it now, where you risk 2% on the phase 1, get that part over and done with. But then as soon as you're on phase 2, then secure it a bit more, risk 1% per trade. I've got like 4 drinks in front of me, by the way. So if if you hear me slurping on them, don't mind me. Single phase challenges typically only allow a 6% drawdown. That's a bit of a tricky one. Where you'd usually be able to, I'd probably just scale it down by a factor of 0.6. So rather than risking 2%, risk 1.2%, and that would trade it relatively the same. But how much profit do you have to make on that, mate? Because I've never seen a 6% drawdown challenge. But do you have to only make 6% as well, or do they still want you to make 10%? Rocking a coffee and a coconut water. Nice. Nice. Defo not slurping on a drink, Carl. Eye emojis. Ignore Jordan. He's got a weird sense of humour. Let's load up the old MT5. Yeah, 10% target while only losing 6% drawdown. That's a bit rough, mate. Let's do an update on this one for the group. FTP and TFT until they stole my money. Yeah, I lost my accounts on TFT, mate, when they had the whole pause operations thing. I feel like they robbed a lot of us, didn't they? I've not been back to them since that. It was just not good customer service how they dealt with it. Maybe if they fair enough, yeah, not even maybe, if they came back when they unpaused operations or resumed operations and was like, sorry guys, here's all your accounts back, our fault, I might have carried on trading with them. But how big of a fuck you was that when they were like, oh yeah, so we've had all this investigation, all of you have lost your accounts, you're not actually going to get them back, but here's a coupon so you can buy the challenge again and do it all over again. Like, fuck you. No. I'm going elsewhere. You can keep your fucking coupon. Shove it up your ass. Yeah, I'd say they were in the top three. Them, MFF, FTMO, they were the top three, weren't they? MFF went down, TFT went down, and then you just left with FTMO now. So there's a lot of people that ride up FTMO's dick, being like, yeah, they're the top firm, blah, 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 thinking that they'll never shut down. But it goes to show, like, if you were around in trading when MFF and TFT happened, then you'll know. Even FTMO, it's not something that you can just put all your eggs in one basket with. For sure. So it is always good to hedge and have different prop firm accounts with different firms. Like, before you think about doubling up on a prop firm, look for another prop firm that you can get it on. And then if one of them shut down, at least you've not lost everything, all your funding. I'd also recommend Darwin X. I've recently started a Darwin. So this is where you're trading on your personal account. And you basically link it like a MyFX book, link it to their website, and then they can connect you with funding, where you basically show your track record on there. They verify it, prove it. Similar to a funded account, but more like track record based than like phases. So I'd recommend everyone look at Darwin X. The only drawback of it is that the spreads, you can't get a raw account, you've got to trade a standard account on there, and you have to trade on their broker. So it's a little bit annoying. Like, it is kind of like they're obviously running a broker business on the back end of all of this funding type stuff. So you can't like link. You can link an old existing account track record to it, but then to carry it on and actually get the funding, you've got to trade it on their broker, which obviously they're saying is for like a verification point of view. The only way they can fully verify your account is if it's directly on their server. But let's be honest, we all know they're just running a broker out the back of it as well. So that's the only drawback, but I really like the idea of it. I use my FX book and FX Blue quite a lot to show people long-term results and say, look, here, third-party verified, here's what we do on the accounts. Whereas a funded account's a little bit different. You're constantly hopping off one account onto another account, trading in phases. Here's the profit split. There's a lot of smoke and mirrors behind it because it's very retail-facing. Whereas something like building a MyFX book portfolio or building a Darwin X is a little bit more down the institutional side of things. People get put off because it's a lot more realistic, but usually that's the best case in trading. So with it, with like an institutional funding structure, it's usually 2% and 20%. So if you're running a fund like a hedge fund, for example, and you're taking on a client's capital, you'll usually charge them 2% management fee. So let's say someone puts 100k of funding into your portfolio, you charge them 2% up front. So in this 100k example, they'd be paying $2,000 up front just for like management, keeping the lights on, overheads, etc. And then of the revenue that you generate for them by trading their capital, you charge them a 20% performance fee. That's industry standard. That's FCA standard, basically. Whereas from a trader's point of view, for example, if you're trading someone's capital, and you're saying I'm only going to get 20% of it, you'd think, fuck that, I might as well go trade a funded account and get 90%. But that's where the smoke and mirrors side of it comes in, because they're kind of tricking you with the balance that you're getting. It's not 100k, it's 10%. They're wanting you to fucking lose that money, so that they're making money on the challenge fees. It's not being A-booked, like all of that. So it is a trade-off between the retail smoke and mirrors and like the cold, hard, white collar, like institutional side of the trading industry. So yeah, a little bit of funded capital scaling talk. Up North Garm says it's all gibberish. It's Kyle, isn't it? I hope you're good, bro. I've just seen you join the VIP, which is good. Get yourself reading through the new starters guide that we've got. That'll brush you up on trading. Let me know how that reads, because we've made that in super simple terms, comparing it to betting on football, where instead of betting on Man United to win Aston Villa 1-0, you're betting on the euro to go up in strength compared to the dollar. And then you bet on it. If it goes your way, you've made money. That is actually a pretty good analogy, in my opinion. And then in terms of it not being capital gains, and we're not actually buying any euros in dollars, just because you put a bet on Man U to win doesn't mean you're suddenly a glacier. You've not got any shares in Man United, have you? And that's exactly the same as trading once again. By trading this, you're just betting that it's going up and down. You're not actually exchanging any euros or dollars in this. So yeah, there's another football analogy for you. Seeing a bit of weakness on the upside here. See if this breaks lower. Got decent resistance from this EMA. Lower. Head and shoulders forming. Can you see that guy outside? Got a guy in a fucking tannoy. Shouting his heart out. Probably advertising some Muay Thai. Wants to wrestle the cobra. I'll fuck him up. But yeah, starting off a little bit slow on the currencies. Checking on some other day trade positions. So we got EURUSD. This is sold off nicely. We didn't get a retap into this fair value gap. We just continue to sell off. So let's look at this from our perspective. I think we need a retracement on this. So we filled that range. Broke out. Here's how I like to look at it. So if this trend line, we can plot that on the daily time frame. In order to look at the substructure, I'll drop one time frame down. So from the daily to the 4 hour. This is your 4 hour substructure. This A, B, C correction broke beneath. And then again here, could say it's the body there, this is the structure. But what I was doing there is just seeing like, okay, even if we said it was the wick, is that fine? And yeah, it's exactly the same. So that's our third break of structure. So following our John Wick strategy, we need some form of retracement. So 5 waves complete, wait for correction. So I'm not going to sell this. To me, that's already too short now. There's going to be a lot of sellers from this move downwards that will be taking their profits roundabout. So we want to wait for liquidity to be swept from at least these highs. So something like an A, B, C correction higher, sweeping some liquidity from there, refilling all the imbalances that got left behind, maybe even taking out this high. And then we have a new trend line. We look for that to be broken, maybe a correction there, break again. And then once we have the second break of structure, that's when we'll start looking to be bearish again. But for now, we've had that third break of structure, so we want to wait for our correction on EURUSD. So we'll set this one to waiting as well. Checking on our mates down under. If they did, they wouldn't be bobbing off outside. Right, let's check this update on Aussie. That's our downtrend. Price broke out. Substructure, price broke out. Correction, price broke out. So here again, we've had our third break of structure. Similarly to what we just saw on the EURUSD. So this should look like EURUSD just inverted. So after this point, we're saying the 5 waves have been printed. We want to wait for an ABC correction lower before going long again. So it looks like it's started, okay? We're sweeping the liquidity that's resting beneath these previous lows there. For all the people that will just blindly, let's say we used our strategy, but never knew when to stop. Well, we'd be idiots, wouldn't we? We'd be looking to just keep buying this, stops beneath that, long higher, blah blah blah, and we'd get stopped out. So price needs to correct itself at this point. We've swept these lows, we've got some fair value gaps here that it's refilling. Maybe we sweep these lows, but same idea again. We want to wait for a correction lower, and then we want to wait for that to break out higher, and then we want another correction, and then we want that to break out higher, and then we start trading again on this. In the meantime, we fuck off and look at something else. New Zealand dollar probably the same. First break, substructure. Second break, substructure. Third break, same again. We want to wait for an ABC correction, price to come back lower, sweep some of these lows, make some lower lows, and then we look for it again in a bit. So we're not ready to trade that yet either. All we're looking at for now is the pound and the euro. Let's go over this one again. Quick check on the dailies, see if anything's happening on the intradays. We've got EMA resistance, but not any nice wave structure. Cool. Right, let's check the euro. Downtrend, price broke out. Substructure in form of A, B, C, price broke out. Now this was a bit of a weird one because when that price broke out, we didn't actually break the high of this B wave. So we needed this to create that change of character that we're seeing there. So that's why we didn't immediately look to trade this there. We waited for this. After this got created, we did actually look for a long from this low to this high. Price didn't retrace enough and it pushed off higher. I wonder if we were a bit more aggressive, could have looked from this low to this high to come back to our fib levels. Stop loss there. TP's higher. That would have hit TP1 by now. But hindsight's lovely, ain't it? We didn't take that trade. Now, prices broke out again higher, so this is our third break of structure. So we're not looking to trade that higher. The idea we were saying yesterday was about, is this actually a strong breakout higher? Because it's reversed every single time. Today, I'm going to say yes, it is a breakout higher. You've had multiple 4-hour closes above. It wasn't a wick, it was a close. So I'm going to change my tune on that long that we initially had eyed up there. Not looking for that. Called me aggressive. Did you take that long then? Yeah. Nice. Yeah, at the time I wasn't looking at it. I wasn't looking at it like a trade, but that was a valid trade. We even had a 4-hour rejection there, so that is a nice trade. That. Pretty sure we were already long on GU, which has been nice. I bet I drive people crazy the fact that I'm long and short on the same thing. People need to realise that trading is fractal. You can be long on one time frame, short on the other. Play ping pong with it. This one's playing out nicely. We've got some very nice 1 hour rejection candles showing that it is just imbalance that's being refilled before price comes back lower. I'm a female police officer. Fucking hell, lads. I am a female police officer. He So following this then, breakout, breaker substructure, third breaker structure. So yeah, let's wait for this to correct a bit as well. Same as we said on the others. So from a 4 hour perspective, let's say 5 waves complete, wait for an ABC correction before looking long again. So, as you can see from the watch list, it's not really that great a time for entries from a day swing perspective. Basically, we're making higher high, higher low structure, so the trend is bullish, but it's kind of exhausted at this point. We need it to correct and sell off a little bit more before we go long again. That doesn't mean we can't look on the 1 hour and 15 minute for shorts if they present themselves. So I'd say that's our trend line for the bullish trend. What we want to do with this is wait for it to break out, number one. Wait for a substructure in the form of a correction, and then wait for that to break out, providing a change of character. Look for areas within that move that need refilling, trade it lower. That's your setup. If you can't just sit on your hands and wait for that, you don't deserve it. Too many beginners hop into a chart and start trying to trade like the current price. It's not always time to trade. Wait for your setup and you'll actually be a successful trader. That's why it helps having multiple strategies so you don't get bored. You can see, right, I can't trade that with this one, but let me look on a different time frame with a different strategy. We need that low to break for a change of character, and we need, well, that's just fucked. That's kind of a head and shoulders with a wick. Head, left shoulder, head, right shoulder. So I'd say it's this level that we need to break for a change of character. So how we caught this was this 1 hour uptrend. That was the trend line. 1, 2, 3 touches. Initially broke, but immediately came back in. So this is just a fake out. Price broke higher. Price broke lower, causing a change of character of that previous low. Okay, so that is a change of character where these lows are closing beneath this low. This is a valid low. What? Wrong tool. And now I've just opened fucking Internet Explorer. Great. Great work, Carl. Amazing. Keep it up. Let's go over that again. So, this trade is because of 1, 2, 3 touches, which form this trend line, like that. We initially had this breakout, which proved to be a fake out, because it immediately came back into this channel. It did go on to make a higher high, therefore this low is a valid low, with this high being the high, which was higher than this high. Now that price dropped and closed beneath this low, this gives us this change of character in price. This first low that it properly created was our substructure level, and price managed to close beneath that. So that's our break of substructure. How we trade that then is we look from this high to this low, the fib levels of the retracement, like that, coupled up with any areas of inefficiency, such as this 4-hour fair value gap there, which is also a balanced price range because it's a fair value gap on the upside too. So, all in all together, we look for an entry here, price came up, hit our level, and now we're selling off to the downside. So that's where this trade has come from. If you didn't catch that yesterday, let's check out the other pairs on the other time frames then. Aussie dollar. That's our 4-hour trend. Break structure. Got to change your character from that low. We're just waiting for this to present some form of substructure. CM's just discovered I'm a female police officer. Now on the 1 hour, we've got this downtrend. Let's mark that purple so we're not conflicting. Hour. We're only just hitting that on the 4 hour. One hour. EURUSD. We got a 1 hour trend there? Possibly. Yeah, it looks like it. Got a 1 hour trend on EURUSD that's pretty deep. So, the reason I've been doing this, by the way, is basically if this 1 hour trend breaks higher on EURUSD, okay, then we can look on the 15-minute for some form of substructure. Maybe it's just a flat high-low like that, and then we have this substructure. If price then breaks higher on the 15-minute of that, we can start looking for trades on the 15-minute higher. So the exact same strategy that we usually look for on the 4 hour, but this also works when you're considering 1 hour trends and then 15-minute price. So maybe that's an idea that we keep an eye on as well. I have just marked it out on all the other pairs as well. Same time frame as this basically. This trade on GU is where we're looking at a 1 hour price trend and then trading 15-minute price. So we could look to do the same on the other pairs too. EURUSD is some time away. AU is a little bit too conflicting, where we're looking for 4 hour shorts, so we don't really have the trading range to look for the 1 hour longs. Whereas EURUSD has got that decent trading range higher, where we've already said we're looking for these levels to liquidate for the 4 hour move. NU still on the cards, because you never know, you might find support from this level that trades price higher up to these highs. So that's a waiting game. Change EURUSD to watch. AU don't really like. Yeah, we're waiting on that as well. The Euro, this one's in no man's land at the moment. I wouldn't trade that. We just want to wait for that to sell off. Until it breaks this uptrend, we can't even really look for any shorts. So yeah, nothing to trade right now, in my opinion. So let's just keep an eye on price and keep watching for the day. Rio says he's long on GU. What do you see on GU, mate? Is it the Asian sweep that you're trading there? We're currently waiting for... Well, intraday looks a bit garbage, to be honest, but we are seeing rejection from the highs. What we need for our bearish confluence intraday is for this low to get broken. And then we have the change of character to the downside. This looks like a head and shoulders forming there. In terms of the Asian sweep, it's a very directional Asian session, which has got decent volume to it. It's like a 40 pip Asian session, trending in a direction. So I wouldn't look for the sweep when the session's got that behavior. On the daily, on the day trading, we already have our short bias to go lower. I was thinking it was looking bullish for the day with this sweep and then change of character higher, but this price is just messy, and we're also getting that head and shoulders nature. I'm not looking for sells though. I want to wait to see this level get broken, and then need some lower lows and lower highs first before I sell that off. EU's got a bit better wave structure with these lows and these highs, but still we do still have higher high, higher low structure up until this breaks. So even if price reversed from this point, you know, price is still bullish because this low hasn't been broken. So that's what we're waiting on for EU, is we want to see a close beneath this low on the 5 minute there before we can really look to start selling that. So I wanted to see a close beneath this level. So this wick, I'm not looking to trade that just yet. I want to see an actual 5-minute candle body close beneath that level to class it as a change of character. So we have this change of character lower here. We have the head and shoulders there. Now we've created a lower low, lower high, lower low. So this confirms the bearish trend. Now that we have this, we could look to go short on the 2 minute. So we're having a pullback on price. What we want to do is look for some rejections in price and then catch an entry from our levels within this zone. See if we get it. Price is rising near the level. Just want to wait to see if we get any rejection as price comes back to these zones. Currently on the 2-minute time frame. Gonna go hop on the 1 minute instead and get a better look. There's our TP1. There's our TP2. We've got price at our level now, but we just need some rejection. 3 pips stop. Price is rejecting. Got some craziness going on outside. That's why I've had the mic on mute. Don't know if you can hear that. Nope, no rejection. So we're not entering that just yet. Again, no rejection, so no entry just yet. Yeah, this might carry on through without giving us any rejections, which is one of the reasons that we have to wait for them for events like this. If price breaks this high without any rejections, then it's an invalid trade. Which it might do. Yeah, okay, no rejection, no trade. That's exactly why we wait for some rejection in our zone first and don't just blindly trade that. When you're trading on the 1 minute time frame, you need some form of candle confirmation. And you're on the right time frame for it. It's not like you've got to wait 4 hours when you swing trading to see one candle print. Just give it a minute and see how price reacts at your zone. So this is a perfect example of why we wait for candlestick rejections before we enter, because this has just saved us from a loss. There was no rejection from our zone, and so we didn't get in the trade. And rather than losing 1%, we've not got in the trade at all. So perfect example of why we have that as a confluence. And with that being said, now that this is broke out, I don't think we're going to get any trades between now and the end of London session, so I'll probably hop off the live. Price action again within London hasn't really been the one today. We had a possible entry there, but we didn't have the rejections to take the trade, so we didn't trade. Now I'm very doubtful that we will get another trade set up before the end of our trading range. So I'm going to end the live here. Right now we're just in this GU short, waiting for that to play out. So we'll keep updating the VIP group on how this one gets on throughout the day. Thanks everyone for tuning in. Please drop a like if you've learned something this episode or if you find them really useful. And I'll see you tomorrow.